Hey everyone, welcome back to the show. Today we're doing something a little different. I'm going to walk you through ScalpWatch, which is the real-time AI-powered trading dashboard inside the TunaSignal.ai platform. And I'm going to explain it as if you've never traded a single stock in your life. No jargon without explanation, no assumptions. If you're a complete beginner, this episode is for you. But before we get into any of that, I need to say something important, and I'm going to say it clearly. Nothing in this episode is financial advice. I am not a licensed financial advisor. ScalpWatch is not telling you to buy or sell any stock. It's a tool, a very sophisticated tool, but it's a tool. Think of it like a weather radar. It shows you what's happening. It doesn't tell you whether to go outside. Trading stocks, especially the kind of short-term trading we're talking about today, called scalping, is high risk. And I don't mean, oh, it's a little risky. I mean, studies consistently show that the majority of day traders lose money, especially in their first year. You can lose some or all of your capital. Prices can move against you in literally seconds. So if you're listening to this and thinking about trading, start with paper trading, which means practicing with simulated money. Learn the mechanics, learn the language, and if you ever decide to trade with real money, talk to a licensed financial advisor first, and never, I mean never, trade with money you need for rent, bills, groceries, or emergencies. Okay, with that out of the way, let's talk about what ScalpWatch actually is and why we built it. So let's start with the basics. What is scalping? Scalping is a style of trading where you're making very short-term trades, we're talking minutes, sometimes up to an hour, to capture small price movements. You're not buying a stock and holding it for weeks or months. You're getting in, catching a quick move up, and getting out. The analogy I like is fishing. Long-term investing is like deep-sea fishing. You cast your line and wait hours or days for the big catch. Scalping is more like fly fishing in a stream. Quick, targeted casts. You're catching small fish, but you're catching a lot of them. Now, here's why scalping is hard. You need three things: speed, information, and discipline. You need to see opportunities fast. You need to understand what's actually happening with the stock. Is this move real or is it just noise? And you need the discipline to take your profits and cut your losses quickly. That's the problem ScalpWatch is designed to solve. It handles the speed and the information part. It watches the entire market, filters through the noise, and surfaces the stocks and setups that actually matter. The discipline part? That's still on you. Alright, so how does it actually work? I'm going to break it down into 4 steps. Think of it as a pipeline. Data flows in one end, and actionable signals come out the other. Step 1 is scanning. Every few minutes, the ScalpWatch backend, that's the server running behind the scenes, connects to live market data feeds and scans the entire market looking for stocks that are moving. If a stock is up 5% or more in pre-market, or surging during regular hours, ScalpWatch automatically picks it up and adds it to your watch list. You don't have to go hunting for stocks yourself. The system finds them for you. Step 2 is streaming. Once a stock is on your watch list, ScalpWatch opens a persistent real-time data connection. Think of it like a dedicated phone line to the stock exchange. It starts receiving every single trade and every quote update for that stock. We're talking updates every 50 milliseconds. That's 20 times per second. So the price you see is essentially live, not delayed by 15 minutes like some free platforms. Step 3 is analysis. And this is where the AI comes in. The system is constantly crunching the incoming data through multiple layers of analysis. It's looking at price momentum. Is the stock accelerating or slowing down? It's analyzing volume. Are more people piling in, or is interest fading? It's checking something called MACD, across 6 different timeframes, which tells you whether momentum is bullish or bearish on the 1-minute chart, the 5-minute, 15-minute, 1-hour, 4-hour, and daily chart. It's looking at the order book to see where the big buyers and sellers are sitting. And on top of all that, it runs a machine learning model that evaluates about 200 different features to score the quality of the setup. Step 4 is signals. Based on all of that analysis, ScalpWatch generates a signal for each stock. And these aren't vague, they're specific. The system tells you: strong buy, scalp, hold, take profit, sell, or watching. And if the signal is important enough, it actually speaks it out loud through your speakers or headphones. You'll hear something like, ABCD now strong buy, or ABCD broke high of day. So to recap the flow, the system scans the market, finds the movers, streams their data in real time, analyzes hundreds of factors, and delivers a clear signal. All of that happens automatically, continuously, throughout the trading day. Now, I want to pause here because I know this sounds exciting. An AI that tells you when to buy? Sign me up, right? But I need to be honest with you. These signals are not guarantees. A strong buy can turn into a sell within minutes if market conditions change. No algorithm, no AI, no system in the world gets it right every single time. The market is influenced by news, by earnings, by tweets from CEOs, by geopolitical events, things that no model can fully predict. ScalpWatch dramatically improves your odds by filtering noise and identifying high-probability setups. But high probability doesn't mean certain. You still need stop losses on every trade. You still need to size your positions conservatively. And you still need to accept that losses are part of the game. Okay, lecture over. Let's get into the features. When you open ScalpWatch, the first thing you see is the watch list. This is a sidebar, or on mobile it's a tab, showing all the stocks the system is currently tracking. And here's what's cool, you didn't have to add any of them. The backend scanned the market and found them because they're moving. Each stock on the list shows you 4 things at a glance: the ticker symbol and current price, the percent change, how much it's up or down today, a signal badge showing the AI's current recommendation, and key stats like volume ratio and market cap. Now, the watch list is personalized per user. If you add a stock manually, say you type in AAPL because you want to watch Apple, that gets added to your list. Other users won't see it. And if a stock is done moving and you want to declutter, you can remove it without affecting anyone else. The system also has smart filters. You can set minimum volume thresholds, minimum percent change, and maximum market cap, so if you only want to see small cap stocks up at least 10% with heavy volume, you can dial that in. It keeps the noise down and surfaces only what matches your trading style. Let's break down the 7 signal types, because this is really the heart of ScalpWatch. Strong buy. This is the best signal the system generates. It means multiple timeframes are aligned bullish, volume is strong, the setup quality score is high, and the machine learning model gives it a high confidence rating. If you're looking for a trade, this is the one you want to see. Think of it as the system saying, everything I'm looking at says this stock wants to go higher right now. Buy. This is a solid signal but not quite at strong buy level. Maybe one of the longer timeframes isn't fully aligned yet, or volume is good but not exceptional. It's still a valid entry, just with a slightly lower conviction. Scalp. This one's interesting. It means there's a volume spike happening, something is moving fast right now. It's an opportunity for a very quick in and out trade. But the key word is quick. These moves can reverse just as fast as they started, so you need to be ready to exit at a moment's notice. Hold. The stock is consolidating. It's not going up, it's not going down, it's just sitting there. If you're already in a trade, this means sit tight and wait. If you're not in yet, don't enter. Wait for a clearer signal. Take profit. This is the system saying, hey, this stock has run up nicely, it's approaching resistance or a target level, and momentum is starting to fade. Consider locking in some or all of your gains. It's not a panic signal, it's a responsible reminder to secure what you've earned. Sell. Bearish momentum detected. The trend is turning against you. This is your cue to exit the position and protect your capital. The system sees weakness across timeframes and is telling you the upside is likely over for now. Watching. The system is monitoring the stock but doesn't have enough data or enough alignment to make a confident call yet. It's on the radar, but not ready. Think of it as interesting, but not yet. Now, here's an important nuance. The system doesn't just flip randomly between these signals. It uses what's called a state machine, where the stock progresses through stages. First it's scanning, then setup forming, then entry zone, and finally entry confirmed. Only when the setup fully confirms does it fire a strong buy. This is a deliberate design to prevent false alarms. The system would rather be late on a call than wrong on one. One of the most powerful features in ScalpWatch is something we call the MACD cockpit. So what is MACD? It stands for Moving Average Convergence Divergence, but honestly, you don't need to remember that. Just think of it as a momentum meter. It tells you, is this stock gaining steam or losing steam? What ScalpWatch does is it tracks MACD across 6 different timeframes simultaneously. Picture 6 circles in a row. The first one represents the 1-minute chart, the fastest, noisiest reading. Then 5-minute, 15-minute, 1-hour, 4-hour, and daily. Each circle is color-coded. Dark green means strong bullish momentum, the trend is powerfully upward. Regular green means bullish. Lime means the bullish momentum is starting to weaken, still up, but slowing. Yellow is neutral, transitioning, could go either way. Orange means slight bearish pressure. Red is bearish, the trend is down. And dark red means strong bearish momentum. The golden rule is alignment. When 4 or more of those circles are green, especially the bigger timeframes like 1 hour and 4 hour, that's a strong confirmation that the trend is real and has legs. That's when the system generates its highest confidence signals. But here's a pro tip. If the shorter timeframes, 1 minute, 5 minute, are red, but the longer timeframes are still green, that's not necessarily bad. That might actually be a pullback entry, meaning the stock dipped temporarily within a larger uptrend, and it could be a chance to get in at a better price. ScalpWatch recognizes these patterns too. Think of it this way, if you're on a highway heading north, and you slow down for a speed bump, you're still heading north. The short-term timeframes are the speed bump. The longer timeframes are the highway. ScalpWatch also shows you the Level 2 order book, which, if you're new, is basically a list of all the pending buy and sell orders at every price level. On one side you have the bids. These are people waiting to buy the stock below the current price. Think of these as the demand floor. If you see a massive stack of buy orders at, say, $3, that's called a bid wall, and it acts as support. The stock is less likely to fall below that level because there's a wall of buyers waiting there. On the other side, you have the asks, people waiting to sell. Large sell orders above the current price act as resistance. The stock has to chew through all those sellers to move higher. The gap between the best bid and the best ask is called the spread. A tight spread, just a penny or two, means good liquidity. You can get in and out easily. A wide spread, say 5 or 10 cents on a $3 stock, is a warning sign. It means fewer people are trading, and you might lose money just from the spread alone. Beyond the order book, there are a few key numbers you should understand. Volume ratio, sometimes called R volume. This tells you how much more volume the stock is trading compared to its average day. If it says 3x, the stock is doing 3 times its normal activity. For scalping, you want at least 2x. It means something real is happening, there's interest, there's liquidity. Float. This is how many shares are actually available for public trading. A stock with under 20 million shares of float is considered low float, and those stocks can move violently because supply is limited. Great for scalping if you're on the right side. Dangerous if you're not. Market cap, the total value of the company. For scalping, stocks between 50 million and 500 million in market cap tend to offer the best volatility. Mega caps like Apple and Microsoft barely move 1% in a day. Small caps can move 50% before lunch. And then there's VWAP, which stands for Volume Weighted Average Price. Think of it as the fair price for the day. If a stock is above VWAP, buyers are in control. Below VWAP, sellers are winning. It's one of the most important reference points for any intraday trader, and ScalpWatch tracks it for you automatically. Here's one of my favorite features, and it's especially relevant for a podcast audience because it's all about audio. ScalpWatch has a voice alert system built in. When you enable it, the platform actually speaks to you through your speakers or headphones when something important happens. You'll hear things like, ABCD now strong buy. ABCD 1 hour turning bullish. ABCD broke high of day. Volume spike on ABCD. This means you don't have to be staring at the screen every second. You can be reviewing your trading plan, eating breakfast, stretching, whatever, and the system interrupts you when it detects something that needs your attention. Now, the system is smart about this. It doesn't just bombard you non-stop. There's a rate limiter built in, maximum 5 voice alerts per minute. It deduplicates so you won't hear the same alert repeated. And it prioritizes. A strong buy entry signal will jump the queue ahead of a lower priority informational alert. You can also set custom price alerts, like, tell me when ABCD hits $5, and the system will announce that too. It's like having a trading assistant sitting next to you, watching every screen, and tapping you on the shoulder only when it matters. Alright, I'm about to walk you through what a typical trading session looks like using ScalpWatch. But before I do, one more reminder. What I'm about to describe is how the tool works. It is not a recommendation to go make these trades. Every single trade carries risk. You should never enter a position without understanding your maximum downside and having a specific plan for what you'll do if it goes wrong. If you don't have a plan, you don't have a trade, you have a gamble. Okay, let's walk through a typical morning session using ScalpWatch, step by step. Step 1, you open ScalpWatch. It's pre-market, maybe 8 or 9 a.m. Eastern. The watch list has already auto-populated with stocks that are moving in pre-market. You didn't have to search for a single one. Step 2, you scan the list. You're looking for stocks with the brightest signals, BUY or strong buy. You glance at the MACD dots. You want to see green, especially on the longer time frames like 1 hour and 4 hour. That tells you the momentum isn't just a pre-market blip, there's real trend behind it. Step 3. You dig into a candidate. You click into a stock and check a few things. Is the volume ratio 2x or higher? Good, there's real activity. Is the float under 20 million? That means it can move. Is the price above VWAP? That means buyers are in control. Is the setup score 70% or higher? That means the AI considers this a quality setup. Step 4. You check the order book. Is there bid support below the current price? Are there massive sell walls above that could block the move? Is the spread tight enough that you can get in and out without giving up too much? Step 5. If everything checks out, you enter your trade. You can log your entry price right in ScalpWatch so it tracks your profit and loss in real time on the dashboard. Step 6. You let ScalpWatch manage the monitoring. It'll alert you when the price approaches target levels. It'll tell you when MACD starts turning. It'll fire a take profit signal when momentum weakens. You can set custom price alerts on top of that. Step 7. You exit when the system says so. Take profit, sell, the MACD circles turning red, a flush risk warning. These are your cues to lock in gains and move on to the next setup. And then you do it again. Scan, analyze, enter, manage, exit. That's the rhythm of scalping with ScalpWatch. You might be thinking, there are a lot of trading tools out there. What makes this one different? A few things. First, the noise reduction. Most alert systems react to every price tick. ScalpWatch doesn't. It uses a state machine approach where stocks have to progress through stages, scanning, setup forming, entry zone, entry confirmed, before the system fires a signal. This dramatically cuts down on false alarms. You're not getting pinged 50 times a minute. You're getting notified when something actually matters. Second, the multi-time frame analysis. A lot of tools look at one time frame and say buy. ScalpWatch checks 6 time frames simultaneously and requires alignment before generating high-confidence signals. A stock that looks great on the 1-minute chart but terrible on the hourly? ScalpWatch will downgrade that signal. It's looking at the full picture. Third, the machine learning layer. The system doesn't just use static rules. It has a trained model that's learned from actual trading outcomes, what happened to the price in the 1 minute, 5 minutes, 15 minutes, and 60 minutes after a signal was generated. It knows which patterns led to winners and which led to losers, and it uses that knowledge to score every new setup. And fourth, the voice alerts and real-time streaming. The data isn't delayed. It's not refreshing every 30 seconds. You're getting updates 20 times per second, and the system speaks to you when something needs your attention. In scalping, seconds matter. This platform is built for that speed. Alright, let's wrap this up. ScalpWatch is an AI-powered, real-time trading dashboard that scans the market for you, streams live data, analyzes hundreds of indicators across multiple timeframes, and delivers clear, actionable signals, complete with voice alerts so you don't miss a thing. But I want to end where I started, because this is the most important thing I'll say in this entire episode. This is not financial advice. ScalpWatch is a tool. It does not know your financial situation. It does not know your risk tolerance. It does not know whether you can afford to lose the money you're thinking about trading with. Signals can be wrong. Markets are unpredictable. A stock that's up 50% in the morning can be down 30% by lunch. That's not a hypothetical, that happens regularly with the kind of volatile stocks scalpers trade. If you're new to this, start small. Paper trade first. Learn what a stop loss is and use one on every single trade. Never risk more than 1 to 2% of your total account on any one position. And if you're ever unsure about whether trading is right for you, please, talk to a licensed financial advisor before putting real money at risk. The best traders aren't the ones who win every trade. They're the ones who manage risk on every trade and live to trade another day. If you want to check out ScalpWatch, head to TunaSignal.ai. And if this episode was helpful, share it with someone who's been curious about trading but didn't know where to start. Thanks for listening. Trade smart, trade safe, and I'll catch you on the next one.